All right, everyone, welcome back to the channel. I appreciate everyone tuning in. Today, I want to talk about confluence, okay, using paired charts, whether it be a higher time frame with a lower time frame or multiple time frame charts, okay. Today was a great opportunity because if you look at the 60 range chart, we had an area of demand resting out on the 60R. I'll show it to you right quick. Price bumped into it or tapped into it. Right here was a demand zone off the higher time frame. What we want to see then is if price taps into an area of demand, say for instance here on the 60R, when we got aggressive buying to the upside, price came back, retraced to it, tapped into it, then you know that price at some point is possibly going to reject, and we look for price to test some higher areas of liquidity or take out liquidity above, especially when we see we have similar highs right here. So we know those are areas of liquidity that price could run up and try to possibly take out, okay? It's the same thing that we do every day when we're trading, primarily like with the 12R and the 4R, say for instance. But here's an example of 60R, a higher time frame confluence that we can scale down to, or we can scale down to the 12R and look for a trade opportunity. So right here on the 12R, if we take a look, this would be the area right here where price tap into that demand zone. Let's kind of I'm gonna take that red line because I don't have it exactly where it should be. The demand zone was really the top end of this, the wick of this red candle right here and drawn out, but for all sakes and purposes I haven't really drawn it out. But anyways, I just showed it to you. Price taps into it. Here we are on the 12R. Okay, now prior to that, what we saw here was price push down, pull back, break lower, and it broke structure here to the downside at 66, right? Okay, so we have price taken out, structure to the downside, as well as taking out and taking out liquidity, right? So price tap into a higher front time frame demand zone, takes out a break. We got a break of structure and takes out liquidity. So typically, when price takes out liquidity, it's going to aim for liquidity. Takes out liquidity on the downside. Okay, it's going to mean a run and sell stops pretty much. It's going to look for aim for areas of liquidity above, right? So if we look at our higher time frame, like I showed you, there were similar highs in areas where price would potentially try to go after, right? But even if we look at the 12 range chart, the lower time frame, we see that price, there's highs right here, similar highs, equal highs right here, as well as right here. Okay, so that's what happened when price rejected this demand zone with the higher time frame, took out liquidity as it was retracing back to that demand zone. It pushed up, pulled back, took off, took out liquidity here, and it's aiming for areas of liquidity back to the upside here in areas which I showed you off the 60R, where areas of liquidity in which it could potentially try to conquer or take over or take out. All right, so that's what we're looking for here, and when price is making these moving and making these higher highs and higher lows, we look for opportunities on these scale back or these pullbacks or retracements to go what? To go long, right? So let's see here. So when price made this push to the upside right here, pull back, we got a breaker structure above here at 80. So, we look for, now this is off the 12 range, we scale down, look for liquidity to be taken out to the downside as we pretty much retrace back to a zone, in this case here, a demand zone, which we are primarily tapping into right here. Well, not quite yet, a few ticks away, I'd say. And if so, we could look for an opportunity to do what? To go long. But just be careful, and pay close attention to price action and what's unfolding and going on in the charts here, okay? That's the single most important thing, is being able to read market structure, follow price action. But this pursuit would be to try to take it back up to where price could capitalize, or the market could capitalize and start to take out liquidity back to the upside. I mean, we have liquidity resting right here above 4,500 at primarily at 4,501, say for instance 4,501 and a half. So those are opportunities and things we look for. Again, price pulls back to a demand zone. Look down at your lower time frame, see if liquidity is being taken as it's pretty much moving to the downside, okay? And then we look for an opportunity to take it back to the upside, all right? Okay, so we saw the bounce from the demand zone off this 60R. The question is that there's a little imbalance right here that price hasn't tested yet, right about at 56 3/4. If you look below that, what we have is price has filled every area of an imbalance, leading back up, okay? So as it's retracing back down, It did tap into the demand zone here, but it did not tap in and fill the imbalance back at the demand zone. So that's going to leave me a little question. What I mean by imbalance, if I blow this up, guys, you see this demand zone that price push higher here. This bullish candle that was taken out by this candle, okay? There's an imbalance in between these two areas here that price has not 100% filled in as it's retracing back down, okay? It's trying to. So I think that more than likely it's probably going to try to come down here, fill that imbalance, and then possibly take off to the upside. If we get rejection, at that point, we want to look down at our lower time frame. So I'm going to mark that. Just go ahead again and mark the the demand zone here. Okay. Again, there is a little imbalance resting right here that has not been tapped yet. And price could come down there and tap it and then decide to want to possibly reject. If we could scale down, we'll have to scale down to our lower time frame chart, guys. Excuse me about that. Kind of stuttering over my own words. But look for the rejection if price gets down there, taps in, takes out that, or fills in that imbalance or gap, and then see if it wants to push higher and start taking out some areas of liquidity above. You know, sometimes it'll take off before hitting that imbalance, but the imbalance, like I say, is powerful stuff. It is the key. So I'm thinking that possibly it's going to want to try to come down there and hit that imbalance, and then we'll scale it down to the 12 range chart, see if we got liquidity being taken out to the downside off the 12 range, tap into the to the demand zone 100%. Is already tapped there once, but we do have that little imbalance resting right there at 57. So we have to be careful and be mindful of that as well. Yeah, so price is pulling back here. I think it's just aiming for lower lows now. A significant push lower here. Looking even at the 4 range, we got some breaker structure to the downside, but price in a wedge right now. So just gonna sit it out and try to determine what the market is trying to do here. I mean, there was some good trades today, but you just had to be quick about them and being able to understand what was unfolding in front of you. All right, we're at the daily POC. I definitely do not like trading around this area here, but looks like we could get some rejection. We are at a key area on the 12 range chart. It's a demand zone, but got to be careful here because price can break lower. So I'm looking at my 4 range to see if there's going to be any fall through on the rejection at this demand zone off the 4 range. Excuse me, the 12 range. You can see it right here, and price filled that little gap right there, but we can continue pushing lower. So I have to be careful, very careful. Extremely dangerous because we're trading around or looking to trade around the daily POC, but price may just push through this area and continue pushing to the downside at this point here. So I'm just going to wait it out to see what happens here. Okay, so I am long. I am aiming for, really want to aim for up here, knowing that price can definitely take out. Excuse me, this is off the 4 range. Can definitely clear this area here, but I'm aiming for some areas higher above at this point. So I'm really looking for price to come up here and take out this area here. Not much off this trade here. Hopefully, I'm going to put it right here. Quick scalp off the 4 range. Fall through. Rejection. Price could possibly, I'm sure, we'll see if it takes out this area here. There's liquidity resting right here off the 4 range. Aim for those areas. And price could actually maybe push higher. So right now the market is being a little stubborn here and not wanting to push higher at this moment. Looks like it may have grabbed some liquidity already off the 4 range here. Let me see. Yeah, I still feel it's going to push higher here, but I'm going to hold the trade. Break this area here at 74 and possibly run up and grab some additional areas of liquidity. Back to the upside. Small break of structure right here off the 4 range, as you can see right below here on at 76 3/4. So I think we should be okay here where I have my profit target resting at. And price can continue pushing to the upside here. But we're in a wedge off the 12 range, which I showed you. And we are, we bounced off a major area of demand pretty much off the 12 range, but just have to be careful here because price didn't come down here and feel this imbalance again, like I mentioned, off of the 60 range. Sorry about that, guys. If I said 12 range, I meant 60 range demand right here. But I'm looking for price to just scalp right now and clear some areas of liquidity off the 4 range chart. So let's see what happens here. I think what I'm gonna do here is change my contracts, and haven't got that break above this last bearish candle to the downside here. So off the 12 range. But if we do, I think it's going to test higher areas here, at least within this leg right here. So I am going to, my last contract, I'm going to position it maybe right here. It can actually push higher here. That's the thing. And test this area up here. But I need to pay attention and be very mindful of what's unfolding here. All right, so I'm long on this trade here, looking to get filled first contract right here, maybe the second one up here at the top, to fill these gaps here or imbalances. And but we're in a wedge again, like I said, okay. And it's just a matter of determining what price is really trying to do, or I should say the market is really trying to do. So all right, let's take a look. I want to look at the 60 range chart right quick. Kind of get an idea here. Price came back. It tested this area here. This was a pretty much a breaker structure to the downside on the 60 range chart. Price pulling back, testing this area here. There was a small imbalance right here. So price came back, tested that area, and now we're in this wedge. We have a high here, low here. You can see it here on the 60 range chart. And this is a demand zone down here where there's an untested or area where there's an imbalance still resting at on the 60 range. So I must be mindful of that. But I think that before price makes it or sets up to make its next move, it's going to want to kind of fill some of these areas in. So let's see what happens. All right, so as you can see, my first contract was hit here at let's see what we got in here at 73. And then the first contract I took out around this area here. So I think it was like a 3.5 point pickup right there. All right. Okay, so I didn't press record. I had stopped the video. But anyways, price did come up. You saw where the market filled the first contract. It did fill the second one here at 81.25. So I was able to get an 8-point run pretty much on that last contract right there. So I think the first one was like 3. Hold on a minute. Where did I get in at? 73. Got out the first contract at 76 3/4, almost 4 points there, and then the last one up here, the second contract. So that was a nice little pickup there. Price pulling back to a demand zone here, and waiting for the projection. So I got the break with the price breaking into the upside. Now the catch here was this right here. Let me show you, because if you got in here, let me remove this box. Pulls back to this key area demand. If you waited for pretty much price to break at 74 with this green candle here, you almost want to expect price is going to pull back because there's an imbalance resting right here. So what I would do is either scale down to the 4 range chart to look for a better entry, a more precise entry, or like I've shown in many videos, or you can wait for price to pull back. Once it breaks the candle in the opposite direction primarily, then wait for the pullback, okay, right here to get into the trade. So that's the best opportunity or thing to do is wait for price to pull back there, okay? So that'll help, get you into a better trade entry so you're not taking too much drawdown, especially if you don't have enough capital or in your account to really weather the storm, you may get stopped out. So just be mindful about things when you're trading from charts that may be from a slightly higher time frame. The 4 range is probably going to be the best opportunity for you to be able to zero in or focus, really zoom in on a better entry or more precise entry is what I'm trying to say. So either way, good trade here. We are, like I said, in a wedge, guys. I mean, we have a high here, a low here. Prices moving within this area, so we haven't broken this high or broken this low, but we'll see what happens. All right, so let's change subjects a little bit and talk about something. I want to show you, because I've covered this many times in the past when it comes to confluence of using paired charts. So when you are in alignment, meaning when all the charts pretty much, or if you have, say, 2 sets of charts or 3 sets of charts, not 3 sets of charts, or 2 charts or 3 charts, basically using higher time frames and scaling down to where all your charts kind of line together. So have a multiple chart confluence where the market is moving in the same direction. So you got the 60 range moving around one direction. You're looking for a trade opportunity maybe off the 12 range, or you got your 60 range chart moving in one direction. 12 range, you see it's doing the same thing. And then on your entry chart, you're looking for a entry to go, say long, for instance. Okay, so the market is bullish on the 60, the 12, and then you scale down to your 4. You're looking for a demand setup. That's what's going to help you get into a higher probability trade as well. Okay, so the more confluence you have with multiple charts, I've talked about this many times over in past videos. So what I want to show you today is just using, say, for instance, the 12 range chart, okay, for instance, and the 4 range chart. So using 2 charts combined together, because a lot of us trade who trade range charts. I've shown in the past how I trade and using range charts. Now, I don't trade time-based charts, but you may be someone that maybe uses a 5-minute and a 1-minute, or maybe use a 60-minute and a 5-minute and a 1-minute. Whatever your time, whatever your chart style or charting style is, whatever the case is, whether you use volume, tick, range, time base, whatever it is you may use. Okay, guys, what I'm trying to say is just using multiple time frame charts to where you can catch setups allows you to be pushing in more of a higher probability standpoint. Okay, so I'm going to use a 12 range chart and just show you an example. I didn't catch this trade, but typically what happens is, say for instance here, this right here, this move to the downside right here, this was a supply zone, right? Okay, and the way you can look to basically entertain a trade when it pulls back to a key area of, say for instance, this example here where this red outline box is supply zone, is we go ahead and market aggressive selling to the downside, right? Price pulls back, okay? Correct. All right, so it taps into the supply zone. Now, what we can do is scale down to our lower time frame chart. Now, we already see the market is bearish to the downside, right? So even on the higher time frame, we can see the same thing. The price is making lower lows and lower highs, moving to the downside. So we're bearish. We're bearish on the higher time frame. We're bearish on the anchor chart, or primarily this is my entry chart most times. On this chart here, the 12 range, and then we can scale down to our 4 range. To look for a setup on this retracement back to the supply zone. I'm going to show you how this works. Okay, so this is the 12 range supply zone. Okay, so we broke structure. We push lower on the 12 range chart, correct? Pulling back or retracing back to this 12 range supply zone. Now, what we have here on the actual 4 range chart here is a breaker structure to the downside. So when price pulls back to that area of supply on the 12 range, we're also pulling back to a key area of supply also on the 4 range chart. Okay, so when we have 2 things matching up or marrying together or mirroring one another, where we have supply on, say for instance, the 12 range, supply on the 4 range, basically what we want to do on the lower time frame to be able to get into a short entry is look for what most of you guys probably have heard in the past, an M structure formation. Okay, so as price is retracing back to the 12R or 12 range supply zone, it's also retracing back to an area which is a 4 range supply zone as well. Okay, so as it's doing that and pushing, pulling back or retracing, swinging to the upside here, it's taking out liquidity to the upside, okay? And that's what we want to look for, is for liquidity to be taken out, and then it taps into our zone. In this case here is supply zone, and then we want to look for a breaker structure. Excuse me. What we want to look for then is rejection back at the zone. So we have supply, 4 range, supply, 12 range. We want to look for rejection. Now, what you can do is look for a M structure formation. This, if you can just, picture it in your head, this is a M, okay? So if I was to draw this, we'll just use this ray. Oh, sorry, not ray. I meant to use arrow, guys. Forgive me. The arrow line pushes up, okay? Does something like this, and then it breaks lower. I would primarily be going probably short right here at 69.25 if you're very conservative, or you can go aggressive a little bit earlier and maybe take it at, I don't know, 70.25, say for instance. But 60.25 would be a good place to get into the actual, excuse me, not 69.25, I'm sorry, would be a good place to take it short. You got the M structure right here. That ellipse or that circle right there that I drew there, that is the M formation structure right there. Now, what you could also do is let's get rid of these lines right here. Let's say that, we were just looking at that area of supply off the 12 range. We drew it off with, which was this outlined red box or rectangle right here, okay? So price pulls back to that 12 range supply, okay? What you could do if, well, the M structure is going to pretty much signify it's going to classify as an area to where you're going to be able to see a breaker structure in a sense. Okay, it starts to set up or builds that BOS or breaker structure area in most instances. So if you can picture it here, price taps into the 12 range demand, 12 range supply zone. So we start to get this M structure formation here, okay? Price breaks structure when it pushes down right here. When it breaks right below 69.75, okay, it breaks structure right there, all right? Right below this you see this bullish candle right here with wicks at the bottom, 69.75, it breaks structure right there. So you can look for a break of structure once price pulls back to the 12 range demand to get into an entry, okay? So it gets the break of structure right here, breaks below 69.75, look for a pullback, okay? You can look for a pullback to go short, all right? So once it breaks structure, then you're going to have a supply zone set up, off of the 4 range. So it breaks structure, look for a pullback here or even up here for it to kind of possibly fill some imbalances or gaps. Then when you get the break of the candle in the opposite direction on the 4 range, then you can go short at 68.25, all right? So it's just basically a pullback to the 12 range supply zone. Look for either an M formation or a breaker structure on the 4 range. Pull back to what will be now a supply zone on the 4 range. Rejection is the break of a candle in the opposite direction. Go short, okay? Now, what do we go short to? Well, once we see the M structure or the breaker structure occurrence on the 4 range, then we're going to just go back over to our 12 range chart. Take a look at that. We're right here, okay? You see this? This buy-in to the upside here, we have gaps or imbalances right here. So take it back down to the low right here to where we can fill in that last imbalance or gap. So if you got in, what do we say at? Let's go back to the 4 range right quick. Let's say we waited for a breaker structure here on the 4 range, pull back, got in here at 68.25, say for instance. Then if you got in right there, then you take the trade back down to back on the 12 range, back down here to 62. So you pick yourself up 6 points pretty easy right there, all right? So you just have to be able to wait it out, wait patiently, look for price to pull back to a key area of supply or demand off of a higher time frame chart, scale down, and look for, when price pulls back to that key area of demand or supply, look for either an M structure formation if it's at a supply zone on that higher time frame, or a W formation structure if it's pulling back to a key area of demand on a higher time frame, okay? So that's what we did here. M structure formation pulling back to or retracing back to a 12 range supply setup. Okay, M structure formation on the 4 range. Boom, we got that. We got the rejection. Go short, back down to the key area of on the 12 range chart. Okay, just be mindful of price action once you get the rejection. What's resting below you here when you get into a trade. Okay, so that you don't get stopped out for any reason. All right. It's the same thing I did when I took this trade right here today. It was my one and only trade primarily today. Price pulls back to this area of demand right here. Okay, here's the key area. Here's an example right here. This is a demand zone. So in a demand zone, we're looking for a W formation. Pulls back, demand off the 12R, right? So let's go over to the 4 range chart right quick. I guess I should go ahead and possibly mark this off right quick. We'll put this as a crimson outline color and make it, make it all. All right, so that way we can see it on the 4 range. We're going to scale down to the 4 range chart right quick. And where is she at? Let's go over here. Here it is right here. All right, so price pulls back to the key area on the 4 range chart, right? Now that we're in the 4 range, we tap into the 12R demand zone. We're looking for a W formation. Get the arrow line again, pushes down, pulls back, push down, boom, break above, go long, okay? And where are we going to take the long entry to? That's a W formation at a demand zone, okay? That occurred off of the 12 range chart, all right? So where do we go long to? We're going to look at our 12 range chart again, all right? Just kind of give us an idea of some zones, I mean, not zones, but areas of interest, okay? Typically, it would be an area of liquidity resting above us, but we have areas right here. This is the opportunity right here. We have, gaps here, here, and above right here. So I got into trade down here. I looked for my first contract to take out right here. And the second one was taken out at 81.25. So I was looking for price to run back up and fill these gaps here. So now price is doing exactly what I expected it probably to do, was to start to fill all these areas in right here as well. Okay, so, and it may run these highs right here because you got these similar highs right here. So that's liquidity resting right at the tops right there. All right, so that just kind of sums up what I'm talking about, guys, as far as the M structure and the W structure formations. Okay, just being able to use multiple confluence charts, in this case here, the 12 and the 4, to be able to mirror up or marry one another, okay? And when you see perfect or aligned setups take place on both charts, that increases the probability of your trade. So I really haven't done too much trading today, been busy, but I wanted to share that with you guys, because if you take those type of things into consideration and wait patiently for price to approach a zone, then you're going to put the odds are going to be more so in your favor. Okay, all right. So just wait and allow the stars to all align together. Okay, when everything comes together, then it's going to work out. It should work out. All right. But that's all I have for you guys today. Appreciate everyone tuning in. If you want to join the Discord, guys, please find the link down in the description portion of this video. All right. We are growing by the day. People are, I don't want to say learning because I'm not a teacher, but they are learning. You know, I'm sharing information that I think is valuable information that has helped many, many people out. And those that are, coming over to the Discord now and starting to, thumb through the videos are picking up just as well. But we already have successful traders in the group. If you don't believe me, you can come over and join as well and communicate with some of the community members there and just ask them, hey, how have the videos helped you? How has the information that I'm sharing helped them? And you'll see people will let you know that they have what I'm having to share with them or sharing with them has really transformed their trading. And lots of them are, I'll say, those that are within the community are really starting to see their trading turn around. And we do have some very successful traders now that, have shared their stories with me in a sense of, they struggle for X amount of years, whatever the case is, and now watching the videos that I put together has really helped them see the light, and now they have went from not being profitable or breaking even to now being profitable and being in the green every day. That's the goal. Be in the green every day, not in the red. Okay, I'm not saying you're not going to take a losing trade, but the key to that is knowing when is what risk management, trade management, knowing when to get out of the trade quick enough so you can live to see another day, meaning being able to get into another trade, make up the difference, and make up some more, okay? Or be able to make more, okay? And build that account up. Outside of that, guys, if you're interested, like I said, join the Discord. Find that link down in the description portion of the video. Appreciate each and every one of you that continuously show your support here on the channel. Please do me a favor. Please drop a like on the video if you found value in the content. I know I didn't do a lot of trading or capture a lot of trades because I only took one today. Most of it was based upon explanation of how I see things and what I was seeing in the market today. We are in a big wedge, so price can either push up or push down, but we are bearish overall. Also, please do me a favor. If you have not subscribed to the channel, what are you waiting for? Click on the sub button down below. Make sure to click on the bell so you never miss one of the uploads here on the channel. Other than that, that's all I have for you guys today. I appreciate each and every one of you again for supporting the channel. I'll see you in the next one. Take care.